Hello, traders. Dale Pinkert, TradeGATEHub.com. Invite you to join us. If you'd been here a little bit earlier, I put out a silver sell. Still good for about 10, 15 cents in here. I'll get to the metals in a minute. I want to start with energy because I know the last couple of weeks I've been attempting to top pick this market. And even though we've continued to head higher, on the weekly, looks like we are on the verge of turning down. I'm not sure what's going to be the catalyst for that. Talked about maybe a deal with the Iran nuclear on the Iran nuclear front that would bring 1 million barrels back, perhaps after the Olympics, with COVID spreading in China and they having a zero tolerance policy that could consumption could take a hit there too. So I do warn at this point that if you're long oil related assets, that I'm not saying the bull market's over. I'm just saying this is a warning sign with waning momentum to book it. And then if you're a high risk trader, you look for entries to get short. Okay, based upon this weekly. The daily we're actually, confirming. So what I'd like to see is one more high, just above this week's high here, and the 4 hours stay beneath 70 in the coming days for an attempt at a short. Just something else I notice telling me that may not happen is this is an ETF, bearish energy ETF, and so far we've left what is called an island bottom. This is a 4-hour chart, so you have some traders trapped under here. We gapped down, we gapped up. If we don't fill this gap, it could be setting the stage for a rally in this, which would occur with WTI selling off. This was the last time we had that move, and this was about a $20 move in crude. So something similar like this might take us back to about 13 or so. Anyway, keeping an eye on SCO. Since we have an inflation report, why don't we talk about what people are looking at to hedge themselves in inflation? And viewers know I'm still looking for one more flush in the gold market. And when you think about it, we're rallying into what the market is expecting to be a hot print tomorrow. And it has to do with some of the anomalies on used car prices. So we could get a hot print. I'm a seller up in the 1835-ish range tomorrow if that should happen on a hot print. And just like last time from here where I was risking prior highs on this, I would do the same thing at this 1835 level. Risking the high of the move. This will be a breakout on the upside if we start clearing this 1855 level on a longer term scale. So if the gold's going to turn bad one more time, this could be it. I actually think that silver will, as it has been as of late, underperform. Sold some, did a little day trade here. I'd be a seller in silver. I think it's really the preferred short over gold. Say we got 23.40, 23.50. We're already getting somewhat of a negative candle here intraday on the 4-hour. After this big decline that was called the week of the Fed, to me, this still could just be a corrective bounce. And I still think that we're going to see sub 21 and the 2140 bulls be shaken out. And that could be back up the truck time. Looking at Aussie, which has performed one of the better performers this week with the dollar coming off and not coming off much, and Aussie has done quite well. I would look to sell a rally here at this 72, 72.20 level if they try and take the dollar down again, which they could. I came in and bought it at 40 and pitched half of it. This could be putting in a higher low here, but we could retest these lows as well. If you look at the 2-hour, we really weren't diverging much. Again, the bull bear line in the sand right here in the dollar index, I may as well put it up there, is definitely here. So, you know, you need to have a line in the sand where you give up on the bull case in the dollar. And for me, it's going to be right here. Okay. So 94.50, and that's the end of the bull case for me in the dollar. But as you can see, even in the dollar, that we have two drives at this time, you know, it's very possible a strong print could drive it higher. You know, I think that the cable is a better short than euro, because I still think they're unwinding the euro pound trade, which I still like. Euro pound, this weekly reversal took place. I thought we might be able to pull back towards this 84, 83.80 level. It's more bullish if it doesn't. You know, this is a pretty shallow retrace. But if the euro's weaker than the pound after the number and we pull back into this 83.80 level, I would take a bite of the euro pound apple on that. Still long from accumulating all through this area. And if you go back on the videos, you'll see it. I think I described it while it was quiet down here as a trade that was approved by ARP. That's the American Association of Retired People. So fall was so low, they let senior citizens trade this. I think the action's going to pick up here, and this is a pullback after the big reversal that we had yesterday. So regarding stock indexes, you know, the big debate is, was this a low before we go to new highs? Or are we just setting up some type of bear market rally up here, maybe 46.20, 46, and this low is going to be taken out? I do think that that's a possibility. I may attempt some shorts, and rather than the S&Ps, maybe the NASDAQ, much weaker formation. If we got up towards 15.5 up here, I would say that you could have an ABC and fade it. You know, when I look at things, even the leadership, one of the fangs that has held up the best has been Apple. Okay, so when you look at Apple, it could possibly have a new high in it here, but you know, so far not real impressive, especially if we get a fade here in the next day or so. Microsoft, I thought could rally back maybe to this base here again, 320, 325, and then perhaps fail. I don't even need to talk about Facebook, do I? Amazon, after, you know, big earnings beat, it's right back at resistance here. I think it's going to have a hard time getting through 3,400. And even if we don't have a break to new lows and take out that low, I think there could at least be a pullback of this bounce. But anyway, very erratic trading in what used to be considered, and chart patterns would say so, very consistent, really not that volatile type of market. Now we're getting a lot of volatility. So this is going to be an important level. We'll see if Jeff Bezos takes another space flight up here, and we could fade it. I also wanted to cover the grains are still smoking. You know, I talked about beans at $12, and here we are 15. So we're not going to see these levels again. But if we have one more dollar rally, one more little whiff of deflation, maybe we pull back somewhere in here before making new highs. Possibly during the planting season that's upon us coming up here, and we get some type of pullback to $14. I think that's going to be in the next best entry since this. And all the grains look the same. They all look good. And I know everyone's complaining about paying high food prices. I think that the lesser of two evils would be, I'd rather pay high prices and not be able to get something. And, I want everyone to be aware of my interview tomorrow with Ben Maldonado at Ben Maldonado, who does a lot of cycle work with the epoch cycle, EPOCH, and uses squares and different types of geometry to point towards targets and entry points on different markets. So be here tomorrow for my conversation with Ben Maldonado. I think that I have you guys prepped for tomorrow. So I'm just in review. I like, selling cable over euro because I still think that EG is bottom. So that makes cable the preferred short. Also, if I'm right about crude and we're going to get some type of pullback in the crude oil market after it makes a new high, I'd be careful about being short Canada. On Monday, I talked about closes over 128 are going to be a pretty important buy signal. You can almost see a left shoulder and a head and a right shoulder developing here. And just in round numbers, it's about 3.5 from here is going to take us up to 131.5. And that's when I think Canada is going to be a long-term short, but not till we complete this move up here. Then I think perhaps we could be looking at something like this, and that's going to be during the bear phase of the dollar. So looking for one more hurrah in USD CAD. Still think that even though Aussie is pushing up these 2 days, that we could still trade lower under the 70 handle again. And of course, this I think is going to be one of the best trades for 2022 is going to be the long side of gold and miners. And I believe silver will outperform when we set up that buy zone under the $21 level. I know a lot of people have been hoping for 19. There's lots of reasons. This was a prior high. You have a 200-week moving average coming in here. And, it's very possible. This is what I've learned. When everyone's looking for one number, it either won't get there, or if it does, it won't have that much meaning. Could be like a knife, a hot knife going through butter at the same number the whole cosmos is preparing for. So my vote is that we stop going down before we get there. And I'll start scaling around the 2050 level. That'd be enough to take out all of these longs. I think you'd have very few people bullish silver down here. And that's the psychological setup I'm looking for. And also want to liquidate out as many longs as possible before this next move to the upside that I think in PMs is going to be in line with the weakening US dollar. So we'll see if there's one more jiggle. I haven't really been proved wrong or missed much by sticking with this narrative. And I want to wish everyone good luck tomorrow on the number. Looking to fade strength in precious metals, silver preferred short, 2350-ish. Always have a fail-safe stop in there. Look for sales in FX, long the dollar, short Aussie. And again, this wouldn't it be ironic if, you guys, I've been looking for, one more push up towards 117, maybe we get it on a hot number. And one other forecast that I made in November has almost manifested. So it was the 10-year going to 2% by year end. So I was, a month and a week or a month and a half early. Things always take longer than you think in these markets, but 2% looks like we could be there on a hot number tomorrow. So we'll see. I think a lot of people are starting to get a little, bearish bonds a little bit late. I still think there's some more downside, but why weren't you bearish here? Now you're bearish because the Fed's going to raise rates in a month. I think the market has done at least some of the work, some of the price interest rate increases of the discount rate have to be priced in to some extent. So good luck tomorrow, everyone. Good hunting. I welcome you to share your ideas in here. Come to TradeGATEHub.com. I also am willing to teach you a little bit more about my RSI work. I've renamed the Relative Strength Index to the Real Simple Implicator. And I hope you've been enjoying the guests that we've been bringing in, and my Tuesday conversations with Mike Venezia. Mike's going to take a little break and head towards the sunshine, and we'll miss him. But this is why Mike and I are trying to teach you that we don't want you to be dependent on anyone. We want you to be independent of everyone, dependent on no one, and do your own work and learn some methodologies that if they agree with your style and your temperament, it wouldn't matter if Mike was away or anyone was away, because it's you in the market. So learn how to be independent. Nothing wrong with intelligence gathering. I do it all the time. I like to listen and know what smart guys and great traders are thinking. That's one of the reasons why I do interviews. I'm a selfish guy. I want to learn from these guys too, not just you guys. And with that being said, thank you for your attention. Spread the word about TradeGATEHub.com. You know, TradeGATEHub is completely free. And more than it being completely free, a lot of people have their free rooms that they use to upload you to a premium subscription. We're not selling a subscription. All we're doing is selling an idea of having like-minded traders come into a community, share their work so that we could all get better. That's our mission. Our mission is to form a community without selling you a monthly subscription of like-minded traders to come in here and share ideas and become a mastermind group. So if you're watching my videos, you know my hours when I'm here. On Monday, I'm here at 9:30 Eastern time. Tuesday, I'm with Mike. Depends on what's happening in the market. But Monday and Wednesday, I'm here to talk markets with you guys and share ideas at 9:30 a.m. EST. So just sign up for TGH.com. Come in and let's see what you got. Okay. And you know, when you share your work, you're going to become more accountable, and you may just become a more focused trader, because there's something about going public with an idea where it could work out or not work out, and just throwing junk out there. So it would be to your advantage to share your work, so that I know when I teach or when I do these broadcasts, it reinforces what I'm thinking. I hear myself talking about it. It helps make me better. I hope you're enjoying it. But you watch the Olympics here, and these guys didn't get to the Olympics by just watching, working out for a couple hours a day. All right. So if you want to be a champion, you have to make the sacrifices. If you're lazy, find something else to do, or find a good money manager, and don't even fool yourself. So with that being said, don't just count your pips, count your blessings, everyone. I'm looking forward to tomorrow. Should be some nice counter trend trades open, or I'll get rolled over like a steamroller, but I'll have my stops in and make sure you do too. Adios.